Welcome to the webinar on Beach City Capital's investment summary on our real estate investments. My name is Jason Muller. I'm the founder and CEO of Beach City Capital. I believe that our competitive edge is that I'm traditionally trained as an architect. I went to go work for the Journey Partnership in Venice Beach, designing large-scale urban plan projects in probably the 30 to 40 acre range. Thereafter, I went to go do land use and entitlements in Santa Monica, Culver City, and LA. Focusing on the adaptive reuse of industrial buildings to creative office. And this was before it was trending. So this was about 2010, 11, and 12. That's when I got the bug for real estate development. And I didn't know the numbers, so I wanted to go to grad school. I got into USC and Columbia. I chose to go to USC because I grew up in California. I want to build a business out here in California. Loved going to USC. It's a great institution. After USC, I went to go work for our large institutional development company called Ensemble in Long Beach, in which I was able to deliver hundreds of units of housing, mixed-use projects, as well as a series of ground-up hotels. Thereafter, I started Beach City Capital, where I was able to put some money together and buy my first round of functionally obsolescent apartment buildings, allow them to cash flow while I was getting permits, knocked them down, built Ocean View townhomes and sold them for $2-3 million each. Was able to do that about 15 times. Then I was able to buy an old functionally obsolescent apartment building, a larger one, renovate it and sell that. Then I also did a property improvement plan to a hotel, added some keys. And that's when the economy was great. And I knew that I wanted to make sure that I mitigated and hedged my business plan for the next growth spurt of Beach City Capital. As you may or may not know, in 2008, 9, and 10, the vacancy rates in Los Angeles County for multifamily, affordable, and workforce housing was about 4 and 5%. So that's what I wanted to focus the trajectory of Beach City Capital as our second phase of our company's growth. And in order to do that, to scale this kind of venture, I wanted to focus on doing joint venture partnerships with landowners that own their land free and clear. I joint ventured with them, managed the permits, raise the additional capital, and go vertical. So I was able to do that 4 times. One on my Mar Vista project, in which we're going to go vertical in the next 90 days. 2 deals we have in Long Beach, which we're going to be building a 24 unit and a 69 unit, as well as another project in Redondo Beach. And so what I'm going to do is I'm going to give a quick overview of the company, our projects, and our staff, so you get a better sense of Beach City Capital as a whole. I'm going to be using our Beach City Capital real estate investment summary as a tool here. So I'm going to be sharing my screen. You should have this document readily available. And I'm going to go ahead and just kind of walk through it. Here's kind of what I had just mentioned, kind of who we are, what the opportunity is. We are looking to capitalize 4 multifamily projects in which we're going to be looking to raise about $25 million of LP capital. We've already raised about $20 million of LP capital to fully capitalize the equity capital stack of about $45 million of the $150 million worth of development that we're doing. The rest will be sourced through JLL, our capital broker with debt funds. Here's a quick kind of snapshot of our projects, in which Mar Vista is fully funded. Our Catalina Village project, which total capitalization is about $40 million. We're going to be looking to source $11 million of LP capital on that deal. We will be going vertical on that project in Q4 of 2020. Our Queen Beach project, which is valued, the costs are about $52 million, in which we're going to be sourcing about $11 million to go vertical on that project, again in Q4 of 2022. And our Long Beach deal, in which is valued, the cost will be about $19 million, which will be sourcing about $3 million of equity to go vertical again in Q3 for 2020. Total deals that we're working on currently for development is about $150 million, in which $105 million of that will be debt, $45 million will be equity, in which we've already raised just under $20 million, which our equity that we're going to be raising over this next 2 quarters will be to about $26 million. And so this here is Beach City Capital's kind of overview of the projects that I have had exposure to over my career. As I mentioned prior, I did land use and entitlements for the adaptive reuse of industrial buildings and industrial campuses creative office. I also worked at Ensemble to deliver a multi-family as well as hospitality portfolio for Ensemble while I was there. Here's a picture of a couple of the projects that I've worked on with Beach City Capital delivery, and then here's some of the projects that we're working on currently. I believe that our team is very well suited and has a very strong background. I like to highlight Kate Hirsch. She also has a architectural background, who worked with charter schools, delivering about 50 charter schools, as well as working with CIM thereafter, being able to deliver about 50 projects, valued at about $500 million worth of real estate prior to joining Beach City Capital. Florian comes from Blackstone companies as well as Roundhill before starting with Beach City Capital, as well as we have Kyle, who is our investment and finance manager. We have a strong board with Greg Cullen coming from Harvard Investment Group, Roger, who is also a prior owner of PenCal, Reed Goosen, who is a large-scale multifamily owner and operator, and Clinton Abrams, who is a large-scale community builder who builds single-family dwellings. And we have a great Rolodex of third-party consultants who we have Matthew Stewart, who manages our capital markets at JLL, Jeffrey Love, who does our corporate legal. We have Michael and William, who do our taxes and accounting from a CPA standpoint. And I think what makes us special is that we have a creative acquisition strategy, right? A lot of the markets are already topped out. A lot of the projects are literally, the properties overpriced. And so we look for creative and innovative ways to acquire properties. One is to do a joint venture partnership with the landowner, where we literally created a single purpose entity. We allowed the landowner to contribute their land value into the LLC for a percentage ownership in the LLC as an LP. Then we refinance capital out for pre-development to get permits to go vertical. And then we raise the additional capital. We raise the debt as well. We manage the development process to be able to have a cash flowing asset that just cash flows in perpetuity or upon sale. We also like to look at doing a seller carry. So we approach landowners that own their land, and we ask to see if they will be the bank, if they will do a seller carry. So if they have a $10 or $20 million property, what we'll do is we'll do a contract with them, or we pay them like a fee for holding the deal, in which we will be able to do a seller carry upon stabilization of the asset and or entitlements, and then we get a construction loan to take them out. And then we also are able to do a creative escrow strategy, in which we'll hold the property under contract until there's entitlements vested or until we've completed the project. A lot of the times it's upon entitlements, so that the construction lender will take out the landowner. So this allows us to, one, partner with landowners that have great pieces of property that don't have the wherewithal or the knowledge or the capital resources to develop their projects into the highest and best use, but also allows us to get A+ projects in A+ locations for folks that wouldn't typically just sell their properties. So it's a great win-win strategy. The products that we're looking to build as Beach City Capitals, we're looking to build 50 to 200 unit products with maybe some retail is a mixed use project. Depends on the location if it's in demand. We're looking for 5 to 10 year holds, so we are not merchant builders. We're looking to build the projects to hold them for cash flow, to take advantage of appreciation and depreciation in cash flow. We like urban infill coastal California, Los Angeles County specifically, including adjacent kind of counties like maybe Pasadena, Long Beach, etc. We like to look at our development caps to have a total, untrended spread of at least 150 basis points. Our design and spec is middle market, both interior as well as facade. So it's middle market, not too high end. As well as our construction, we like to utilize our pre-construction techniques to minimize construction costs, as well as making sure that the product is constructible. We use BIM coordination, 3D. We use Revit technologies as well as Naviswork on BIM coordination. We do like to do everything third party, so we are not contractors and we are not architects. We hire architects, we hire contractors, and we do everything through an RFP process where we send out an RFP, we have people bid, we check references, we check financials, references, bonding rates, etc. Then we move into our GMP contract to be able to protect the cost escalations, etc. Typically, we like to build podium at grade with type 3 modified above that. And we do like to embrace prefabrication when it comes to walls and roof, like and trusses, etc. As well as a percentage of our parking to be vertical mechanical parking stackers. I believe that our operations as well has to have a tech-based leasing component to it. That's the future of leasing up properties and getting the most efficient occupancy as well as NOI for any property that we're building to maximize the buy right envelope. And we are very conscious of being tax efficient. And we do have 2 projects in opportunity zones in order to allow people to defer their capital gains. And I'm going to move on to our projects. Our projects, as you can see, are focused along the coast in A+ locations. We do have a great series of projects that I can kind of highlight. Our Redondo Beach project was a multifamily for sale product that we were able to sell. We also had a larger scale multifamily project that we were able to renovate and sell. We have our property improvement plan for a hotel that we're able to renovate as well as add 6 keys to that property. We have a series of 2 multifamily for sale projects that we sold in Hermosa Beach, as well as a for sale multifamily project in West Hollywood. And then here's a series of our projects. We have our Catalina Village project, which is a 30-unit project that we're going to be going vertical on in 2022. Our Mar Vista project that we're going to be going vertical on here in about 60 days. And our 2 Long Beach deals in which we're going to be going vertical on next year in 2022. And then here's our local collaborative project, which is a co-working venture project that we have pre-leased already, which we're delivering our space to our 1 credit tenant here in December. I'm going to highlight each project at a high level, not too in-depth, but just so you can get a better sense of each project. And what we're looking to do, this is the phase 2 of our company, right? Phase 2 is delivering these 4 projects in order for us to get to phase 3, which will be more 100 and 200 unit projects that we're looking to grow our development pipeline from $150 million to $500 million in the next 36 months. And we're well on our way for that. And so we do have the Mar Vista project here. in which the overall project cost is $37 million. And we have the land cost to be $88.1 million. We also have the hard cost, including FF&E, to be about $16 million, and the other costs to be about $10 million. We do have the project level returns at an untrended return on cost of about $5.4 million, where the 5-year IRR is $23 million. The stabilization cash on cash is above 9%, which is pretty healthy for a stabilized multifamily project here in Los Angeles. This deal here, we have fully capitalized. We are admitting about $500,000 of retail equity, just kind of as a slush fund during construction. But overall, we're using Parkview for our construction as a debt fund. We have DRC as our mezzanine partner, and we also have Commune Capital as our LP partner on this deal. We're going to be building this project as a 27-unit, 102-bedroom co-living, purpose-built co-living property to build by right, to maximize the envelope, to have it high octane, to have the best property manager, to be able to boost our NOI and boost value. It's a great project right off the coast here in Los Angeles. Our Catalina Village project is 1.2 acres. We're going to be building 30 units with 3,000 square feet of retail. The overall project cost is about $40 million, in which the land is about $13 million. The hard cost is about 14. The other costs are about $13 million. The overall untrended return on cost is about 5.5. The 5-year IRR on this project is 18%. The cash on cash for this deal is going to be over 11%, in which the construction loan will be about $23 million, where the equity is going to be about $13 million, which currently we have slated about 11% for the GP, and we're holding about $11.3 million that we're going to be sourcing from LP Capital. Once we have our permits in hand, GMP in place, and debt procured, and we'll be looking to source that capital here in get commitments in Q1 or 2 of 2022. Great piece of property. We have 30 units in the back where we have retail in the front. It's a really greatly designed product across the street from the Pacific Ocean, which is about 5-minute walk to the sand in Redondo Beach, a 10-minute bike ride to Hermosa Strand, and you're literally across the street from Ocean View Park. This location doesn't get any better. It's absolutely marvelous. Our Queen Beach project is our largest to date. It's going to be, its cost to build is about $53 million, in which the land price is about $5.4 million or $5.6 million. The hard cost is going to be about $2 million, and our other costs are going to be about $16 million, in which our construction loan will be typically about 70% loan to cost, in which will be about $36 million, which will be sourcing about 32% of that as equity. And our JV partner will be staying in the deal for about $4 million. The capital that the GP will be putting in about 1.5, and we will be sourcing the rest of the LP capital of about $11 million, $11.3 million at permit ready when we have GMP bank lined up and our entitlements in place. The untrended return on cost on this deal is just under 7%. The 10-year IRR is about 20% on a project level. The equity multiple on a project level is at 4.5. The cash on cash is pretty healthy, above a 10% cash on cash return. This deal is in Long Beach on Pine Avenue, which is a double retail street, a mile from the water. It's a great location. We are utilizing a tech-based leasing property manager on this deal as well to boost NOI. We're going to be building 3 levels of Type 3 modified with 5 levels of, 3 levels of Type 1 construction with 5 levels of Type 3 modified above this. It's going to have co-living co-working as an amenity space on the lower levels. We're going to have a bike kitchen, and it also has a upper level courtyard that has 2 gyms that have roll-up doors that open up so people can do yoga and Pilates, as well as a great rooftop or a rooftop deck that has full ocean views on the top level as amenity. I failed to mention that on the Catalina Village project, it also has a great co-working space as an amenity, also has a rooftop, ocean view rooftop deck as an amenity on that deal as well. This is our 711 Pine project, in which we're going to be building 24 units on this deal. The overall capitalization of this project is going to be $19 million, in which the land costs are just under 3, hard costs will be about 10, other costs will be about 6. Our construction loan will be about 70% of that, which will be about $13 million, in which the equity we're going to be placing will be about 30% of that, in which the JV land partner will be staying in the deal for about $3 million. Excuse me, $2 million, in which we'll be sourcing $3 million of LP capital to be placed and committed to in Q1 or Q2 of 2022. This deal again is in Long Beach on Pine Avenue, a mile from the ocean. We are using a tech-based leasing property manager to allow for co-living to boost our NOI. This property does have a smaller lobby with a co-working kind of space as an amenity. It also has a ocean view rooftop amenity space on the top as well. And we'll be looking to source about $3 million on that deal. So overall, these are our overall deals here of about $150 million. We're going to be placing about $100 million of debt, with the remaining LP capital that we're sourcing of $25 million. And so I'm happy to talk with you if you have any due diligence questions, or you're interested in either a portfolio investment as an LP, if you are a fund manager managing a family office, if you're an RIA that would like to participate in the syndication of the retail capital, I'm happy to speak with you. I'd like to give you guys about 30 to 60 days of due diligence in order to get through all your due diligence questions. I'm happy to meet with you, give you exposure to our full team. A quick no is better than a long drawn out no. But if you are interested in investing into this portfolio play or individually in each project as appropriate, would love to kind of hear from you. And just to highlight that the 2 Long Beach private opportunity zone businesses with individual opportunity zone funds. If you already have your opportunity zone fund set up, you can invest directly into each of the projects. We are looking to hold Mar Vista for at least 5 years, the Catalina Village project for at least 5 years, and the 2 Long Beach deals for at least 10 years, and catapult us into phase 3 of our company, which would be larger scale, which would be 100 and 200 unit projects, in which we're looking for long-term partnerships from an LP perspective. We already have partners from our debt funds as well as mezzanine, and we're looking to expand our network, and happy to meet with you guys. Thank you so much for your time. Thank you for letting me present our overall portfolio, as well as our investments that we have to offer in our phase 2 of our growth as emerging managers. Thank you so much. My name is Jason Muller. My email is jason@beachcitycapital. If you have any questions, thank you very much for your time.